Hello, everybody, and welcome to the show today. I'm really glad that you could join us because today we're talking about something really cool, something you could literally do like in your underwear at your house for like less than an hour a day and make really, really good money. So today we're going to be talking about stocks and everything to do with tips to improve your trading skills or even get into this if you haven't. And I've got some cool case studies of people around me that are doing some amazing things in this area right now. So because I've got people around me that are getting really good results, I thought I would bring in the guru to teach how to get the best results and how this is something that you can jump into even with a little bit of time committed. So with us today is Jason Bond. Now, Jason's the founder and CEO of jasonbondpicks.com and is a self-made millionaire trader who left the corporate grind to trade professionally. Now, he went from being $250,000 in debt as a teacher with his master's degree to teaching thousands how to make money trading. He's trained well over 10,000 paid members and is the #1 stock trading stock advisory service on TrustPilot, which is the best member review site in the world. Now, he's co-founder of the trading educational powerhouse, Raging Bull, and he's been featured on Forbes, The Street, the Huffington Post, investing.com, Seeking Alpha, as well as the floor of the New York Stock Exchange. So, Jason, thanks for joining us today.
Hey, Ty, thanks for the great intro, man. I really appreciate it, and I'm glad to be here.
Well, I'm excited you could be here. I mean, one of the guys on my team the other day, he's like, hey, man, I kind of got into stock trading and I used to do this. I started to do some day trading and like, he's up like $30,000 for the month. And I'm like, dude, I've thought about it, but I've never actually made the jump. I need to learn more. And then here you are. So like, this is perfect timing.
It's funny. You are my ideal customer because that's how most people fall into it. A friend nudges them and says, hey, I'm having some luck trading. And then it's natural for you or anyone else to go on Google and say, how do I learn to stock trade? And I think that's how I get the majority of my customers. But it's so funny that you brought it up that way because that's how I fell into it. I think that's how a lot of people fall into it. Another way is their brokers aren't doing a great job for them or their advisors, so they try and take the matters into their own hands. It's not always pretty when it goes that way, but how you kind of came to bring that up is how most people find me in the first place.
Well, that's great. I think, it's just a curiosity thing. And what you do doesn't take a ton of time, but you could really lose your behind if you don't know what you're doing. So I'm excited you're able to come on and join us today to talk through this process of even getting started all the way through to maybe even being proficient in what people need to do to actually dive into this and, have some success without losing a bunch of money.
Yeah, absolutely. And there are a lot of things that people can do to prevent the loss of money. First and foremost, I always recommend people start with paper trading. And a lot of people say, hey, if you don't have skin in the game, you have no emotion in the trade. But I always tell people, if you're not equipped to trade yet, you're going to lose money. And the emotion from losing money is going to be negative. Nobody ever feels good about losing, regardless of what we do, and money especially. So the best way for people to start anytime they're getting into active trading, whether it's day trading or swing trading, because that's mostly what we do at Raging Bull, more active trading, buying holds within a day or within a few weeks. The best thing people can do, TD Ameritrade, for example, has a paper money account. It's a live brokerage account with $100,000 of paper money, and it's simulated in real time. So you're literally doing everything you would do if it was $100,000 of real money, but you end up making a lot of mistakes in that learning process. And sure, there's not a ton of emotion involved in a simulated account, but if you don't know what you're doing, I was equated to going to Vegas and playing against professional poker players. They are there fleecing tourists all the time. And the same thing happens on Wall Street. The uneducated mom and pop trader, retail trader who jumps into the market with an E-Trade account or TD Ameritrade account, doesn't know what they're doing, just gets picked apart by the pros. And so without education, it is almost guaranteed that you will lose some or all of your money. I think the success rate is like 94, 95% fail. So only 5% of people who try and be an active trader actually survive over a prolonged period of time. So it's something that people definitely want to get education on.
Yeah, and I talk about, the guy that works for me, Steve, and the fact that he kind of got into this too. But, I say he's up, but he spent, a lot of time at night. He's just spending hours and hours studying this. So I don't want to put out there that, hey, somebody just jumped in and started making all kinds of money, because you hit the nail on the head. I think the very first place to start is to figure out what you're doing, develop some kind of strategy. So how do they do that, Jason? How does somebody get in? Because I don't know. I've never looked. but I would imagine there's a bunch of different people teaching a bunch of different strategies out there, like real estate investing, right? So how does somebody go about getting the knowledge they need to get started here?
Yeah, so there's a lot of good teachers, and then there's a lot of smoke and mirrors and everything in between. It's a very lucrative industry with regard to education. If you're actually a good stock trader and you can teach that to other people and they can stop losing money, just breaking even is a big win for a lot of people, or start making money, you've got a really good business model. So it's difficult, I think, for the retail trader who just starts to Google what is real and what is smoke and mirrors. And the problem with the smoke and mirrors is the end result to that is often a lot of losses and then this distaste for trading, and then people never come back to it. So finding the right coaches and then finding the right strategies for your personality. I always say, like, I'm an active small cap trader. I like penny stocks. I like options on large cap stocks like Tesla, Google. I've got some Tesla calls right now. It's a very volatile stock for a large cap company, which makes the options even more volatile. So these are like the firecrackers of Wall Street. Very juicy trades that can be up or down 10, 20, 30% in a day. A lot of people wouldn't like that. They need to start with something a little bit more safe and secure. But if you're starting with TD Ameritrade Paper Money or any other broker that has a paper trading account, you can kind of start to feel out where your risk tolerance is and learn what you like. So at Raging Bull, we've got about 7 coaches right now, all real money traders who teach their trading strategy. And the way we make it 100% transparent is we stream our brokerage accounts to the client. So people pay us a monthly or a yearly fee for our education, and then we teach them how we trade. We don't advise. So I'll teach, right now about 10,000 paying clients in my service that I teach how to trade stocks. And then Raging Bull has many more across those other 6 teachers. And the key there is finding a strategy that fits your personality. If you try and force yourself into the wrong strategy, it's just going to end horribly. That's kind of what we do at Raging Bull. And depending on the person, I think they could find something that fits them.
Sure. Makes sense. Get started with a paper trading account. Don't even think about trading with real money to start.
Yeah.
And then as you get in, like, figure out what your risk tolerance is. What do you like? Do you like the penny stocks? Do you like the stocks that are much more valuable, that are volatile in a day? Do you want to day trade? Figure out, kind of narrow down what it is you want. And then you can find the right guru coach, like what you guys do. You're the best at what you do. So then you find the guru, the coach, the mentor in that area that can help you with that individualized strategy. But you kind of have to figure out and narrow down the strategy that you really want to work.
Yeah, you do. And we try and help people with that at Raging Bull. We have very conservative, active traders. So Petra, for example, with Petra Picks, she lives up in Canada. She trades the Canadian exchange as well as the U.S. And she is more of a trend trader on large caps, very few options. Options are more volatile for anybody watching this that don't know. So large cap stocks like your Apple and your Google, they're not going to move around a ton. Maybe 1% or 2% in a day. If you play the option on them, those can make wild swings. But she trades these very conservative large caps. She has a larger portfolio. She was a successful businesswoman before she started trading, and she's trying to build her wealth through trading as one of her ways to generate income. That's not going to be for somebody who has a $5,000 or $10,000 trading account. So it's not just conservative, but it could be conservative, and then you need a bigger portfolio. So a lot of times people with smaller portfolios tend to move towards the riskier things to try and build their money faster. And it's in that, they're risky for a reason. If you can build your money faster, you can also lose it faster. And so a lot of people don't know that because of the smoke and mirrors marketing. They get all excited about maybe trading small caps. So penny stocks are small caps. They're not your mid caps of the world. They're not your large caps. They're your blue aprons. Blue Apron trades at about 80 cents right now. They're really struggling to turn a profit, and they're running out of money. So they're heading towards bankruptcy, or at least the chart looks that way. GoPro is under 10 bucks, I believe. Everybody knows these names. Groupon, I think, is $5. So those are the types of companies that I gravitate towards, but that's not going to be for everyone. But once that person gets the paper trading account, they can pick and choose, like, do I like this? Whoa, that's too risky, or this is too slow moving. I want something in the middle. We try and offer something for everyone and then position them the best we can in that service and then let them figure it out from there.
Yeah, it makes a lot of sense. And I love how you do that. And I like how it's really about risk tolerance because, like you said, everybody's looking for something different, with a return or result of what they're looking to get. So let me ask you this. I saw some stuff on the website. Language, I'm like venturing into territory I don't know. But it was interesting to me, so I wanted to ask upon it. If it doesn't make sense, when we move on. So one of the things I saw was like these 3 core trading setups. Yeah. Does that make sense? Like what's involved there?
Yeah, so when you're trading actively, you're doing research on the companies, but you're trying to identify research that is happening in a short period of time. We call them catalysts. So just last week, for example, Workhorse, WKHS, I have 10,000 shares of Workhorse at $1.90 right now. This was trading, I think, 60 or 70 cents last week. Workhorse looks like they might pick up a GM plant. Trump tweeted that out. The stock went from about 70 cents to $3 in a day because Trump said, I believe it was GM, don't quote me, but people can look at it. It's ticker WKHS. A very risky trade. But what happens in this particular trade, it's a story stock. Trump says electric car company might take over this GM plant, and the GM plant is pulling for the electric car company. GM's a really big name, attaching itself to a really small name. That sends the stock flying. I don't necessarily trade that pattern because it's hard to predict. You can't predict when Trump's going to say that. And the stock skyrockets, so it gets really risky to trade in that particular day. But I call it rest and retest. It's also called Fibonacci retracement. After a small company, in this case Workhorse, but it'll happen with Blue Apron too. They did a deal with Amazon. It skyrocketed. Weight Watchers, it skyrocketed. So when these small companies skyrocket, I call it a rocket. That's what it looks like. It's a breakout. It's a rocket. I don't touch it generally. I wait for it to settle 3 or 4 days after the initial excitement and explosion. And we call it a rest and retest. That settling pattern, we decide once it's settled, once it's pulled back a good amount, is it worthy of making another move higher? And I often come in on that. And that's called Fibonacci retracement. So 3 things happen to a stock, to answer your question. They're either crashing, they're continuing somewhere, or they're breaking out higher. They're either breaking down, or they're breaking out, or they're in a consolidation pattern. So I always teach people, it looks like a fish hook when they're crashing. Stock has horrible news, crashes, and then it often bounces, and that kind of looks like a fish hook. In between, if they're not crashing, they're continuing somewhere, whether it's a downtrend or an uptrend. We call these bull flags and bear flags. So you have a stock that's made a huge move down, and then it consolidates in what looks like a bearish flag pattern, an upside down flag. And then it continues heading lower. So the continuation pattern is kind of like the rest stop of the trend. So you're breaking down or you're breaking out. And that is all I look for. So I advertise 3 patterns because that's all I do. And I really only play 2. I wait for them to break down and I play the bounce. I wait for them to break out and I play that retracement, which I call a rest and retest pattern. Once it breaks out, let's say it goes from $1 to $3 and it settles at $2, I buy it at $2 to see if it'll retest $3. And that's why I call it rest and retest. So those are my primary patterns. It happens all the time on penny stocks because they're horrible companies. So anything that's under 10 is generally not profitable. And therefore, it crashes on an earnings call because, again, they didn't make money. They might have to raise capital through an offering and dilution. So you're getting bad news all the time and you're getting crashes all the time. Listen, let's be honest. Apple doesn't crash much. It doesn't get oversold much because it's a great company. So Petra, she has a big portfolio. She can play the trend on Apple. She can put $100,000 or $200,000 in a trade, and 1 or 2% is meaningful. I don't have that size portfolio. I certainly didn't when I started out, and I gravitated towards these small caps. Blue Apron, back to the example. I don't have a position right now like I do Workhorse, but I did have a position in Blue Apron recently. They had news about, I believe, don't quote me, but it was something along the lines of going into Walmart stores with their products. And then they had another news about inking a deal with Weight Watchers and Oprah Winfrey. So here's Blue Apron, the meal kit company. Everybody knows it. Stock is struggling. They're not really profitable. They're burning through tons of cash. But they attached their name in a press release to somebody who's bigger. It wasn't Amazon. I believe it was Walmart. Something about their meal kits being in Walmart. Or some big retail chain like that. Stock skyrockets. I don't trade the skyrocket. Once it rests, I trade the rest pattern for the retest. Once it breaks down on horrible news, so these companies, they skyrocket all the time. Then they turn right around and say, hey, we're raising money through dilution on an offering at much lower, and it crashes. And the process just happens all the time. But it doesn't happen on large companies. I got some Tesla stock in calls right now because it happens on Tesla a lot. Tesla's oversold right now. It's fallen into what penny stocks happen to do all the time. They crash into oversold, too many sellers. So I'll buy Tesla stock even though it's not a penny stock because it's super volatile. And then I'll get a call option on it too. And if Tesla reverses anytime in the next couple of months, I stand to make a decent amount of money.
That's interesting. And this is why it's so important to have a mentor, because what you're describing, like a lot of people see that racing to the top and they're jumping in on that trend.
Oh, that's why it races to the top. It creates so many bag holders because your buddy nudges you at the office and he says, hey, workhorse, Trump just tweeted that they're going to get one of GM's old plants. I believe it's down in Pennsylvania or something. And it's going to bring this factory back to life, all these workers. Everybody's excited. It's an electric car company, so they compare it to a Tesla competitor. You got this 60-cent stock, and people think jackpot. But in reality, the company burns a ton of money and is at risk when it pops to do an offering. And what an offering is when a company isn't profitable. Let's compare it to a person if they're not profitable. You owe a ton of money each month, let's say $10,000 in expenses, mortgage, car loans, whatever, but you only make $7,000 or $8,000 in a month. Well, at the end of 3 months, you're down 10 grand. Companies do this all the time, like Blue Apron, Groupon, and whatnot. And eventually they run out of money. If you don't make as much as you're spending, sooner or later, quarter after quarter, you don't have any money to go to anymore. That's when they do a secondary offering. So not an IPO, which is your initial public offering. We saw Lyft and the Uber do that recently, right? So they do the IPO. These penny stocks, they do secondary offerings all the time. And when they do these offerings, the people who fund them do it at a huge discount to the current stock price. So when these stocks explode, they often raise money and then they crash. And you said all the retail mom and pops who don't know what they're doing, they chase that excitement. Trump tweeted it out. This company is rumored to be doing a deal with the U.S. Postal Service, and it's a big deal in the billions to provide the postal trucks, electric postal trucks for the Postal Service. So people read these things, they get excited, but the company's not profitable. They probably have to take on a ton of debt to acquire that factory. I think I read $300 million, so they didn't need a note for $300 million. People buy it at $3, did buy it at $3 thinking this would be the next Tesla, and now it's at $1. I bought it at $1.90 today. But all the people who rushed in, bought it at $3.30, they're what I call bag holders. And it's the worst type of trader to be, because it's miserable while you're hoping that it comes back to just break even versus trading what is actually happening.
What are some things that you see that people could easily do to improve their success with trading that you just are like, I can't believe everybody doesn't do this?
Yeah. Finding a good coach is first and foremost. When I was a school teacher for a decade, buried in debt, had $250,000 in debt, and I was trying to find ways out of that. So I have a master's degree. I was studying to be a principal. I was doing my second master's degree. My wife, elementary school teacher, literacy degree. So we took on a ton of student loans to do that. And then we bought a house, cars, student loans, personal loans, whatever, credit cards. We just had a lot of consumer debt and a lot of interest payments. And eventually I said, I'm just never going to be out of debt, and we're never going to have more than a few $1,000s in the bank account. So I need to find a business. I learned that I need to pay down my debt, leave teaching, and start a business. I didn't know what I was going to do or how. I stumbled into, well, maybe I could be a stock trader like a lot of people do. And I burned through a lot of small accounts trying to hit the next lotto pick. I buy a stock that was 2 pennies and hope that it would go to $1, and it never did. And maybe I would get lucky here or there, but eventually I would lose that account. So then I got the idea, I need to find a mentor. So I reached out to a guy, now my business partner, Jeff Bishop, and I said, hey, listen, I know you're a qualified trader. I knew that from his online presence. I know you know how to trade. You're a professional trader. If you teach me how to trade stocks, I will teach other people how to do that. So this was before there were a lot of services out there that would teach you how to trade stocks. There weren't a lot of people doing what I'm doing, streaming. Like E-Trade and TD Ameritrade didn't come into the scene until I think like 10 years ago or so, maybe 15 years ago. So when I got started, there weren't a lot of services that you could hire a coach to show you what they're doing. Not advise, but just what are you doing to be successful, and will you teach me? And so that's kind of what we do at Raging Bull, and that's what I asked Jeff. Jeff, if you teach me how to trade so that I'm really, really good at it, we'll create a business around teaching other people how to trade. I'm a great teacher. I have a master's in education, but teaching for 10 years. I can do this. And he said, sure. It took 2 or 3 years for me to really get the hang of it and be proficient at both trading and stopping making mistakes and teaching other people how to be proficient at it as well. And then I've just been getting better and better and better at it over time. And then I've also attracted a lot of people who are better than me that teach at Raging Bull. So there's people that teach with us now that have made many more millions trading than I have. And those people teach our clients as well. And that's kind of how the whole service is starting to really grow, by kind of putting people who have come to me that were struggling, help them, but then they went on to be way better in utilizing their talents to take their message to more people, if that makes sense.
Yeah, I love it. I'm so passionate about people like you that take time from just doing what you do, where you could focus all your attention. And I'm not saying be greedy, but be greedy, keep all the money, or you could take what you learn and then teach other people. And I'm just such a fan of people that do that. It's so beneficial to everyone. And I've learned so much in business that, when you're scrapping and you try to save money, it costs you 10x if you would just go in the right way. And I'm the king of the wrong way. Like, I'm the bull in a china shop, move forward as fast as possible, destroy everything in my wake, and then hope something turns out well. Like, that's me. So I completely understand what you're saying, because, you try to save money and not get a mentor or an expert. You go out on your own, you lose. Not only do you lose the money, you lose all the time you could have used to actually make money. And then in the end, you're like, oh my gosh, like, it cost me 10x to even get to the point where I could have got here in a tenth of the time with a tenth of the cost.
And how about the anguish in between? That person, again, going back to this workhorse trade, I'm only up $500 on it, but that's 2 or 3 times what I made as a school teacher. And this is stock that I bought this morning. I only bought 10,000 shares at $1.90. I'm up $500. That's not a ton of money, but as a school teacher, I only made a couple $100. But as I got into trading, I thought I could figure it out on my own. And you lose your account, only a few $1,000s over and over and over. It ends up being a lot of money, and the anguish in that process often convinces people to quit. They say, okay, in my case, small caps have a bad name because they're the most dangerous stocks, just like options have a bad name. They have a bad name because the most amount of people lose money on them because they see Trump tweet out that this company's going to buy GM's factory, and GM's rooting for them, and it's an electric car company that might get a huge contract with the U.S. Postal Service to have electric trucks delivering the mail, and everybody just thinks, I got to buy it. And then they buy it at 3 because they see these major headlines. I mean, this is a big tweet that goes out from the president about this stock that causes it to go from 60 cents to 3.30. They buy the stock. It's a penny stock. It was just a 60-cent stock before the tweet. Now it's traded in the 3s. They buy it in the 3s, and they're bagged on the trade. They have a bad taste in their mouth for penny stocks. What happened was there was large demand for an unknown name. There's no sellers. The stock wasn't doing a lot of action. And then there's this story that just causes all the excitement. You get a lot of buyers, you get a lot of unsuspecting buyers who get bagged, and then they're like, I hate penny stocks. I'll never do it again. And if you can learn how to recognize when a stock goes from 60 cents to 3.30, it's not going to sustain that move for long. Sometimes they go to 10. But playing it in that process is very dangerous because a lot of times they peter out and then they crash. I wait for them to crash, and then I come in and I buy it if I think the story is good enough for it to reignite. And that's kind of what I'm doing with this one. But that process of learning that little tidbit there can save a lot of people from standing at the water cooler and saying, I hate penny stocks because I bought this one that was going to be an electric truck company, and they didn't get the factory, and they didn't get the U.S. Postal contract. And I bought it at 3 and it's trading at 50 cents. And I just absolutely hate penny stocks. If they understood that there's no guarantee that the factory will go through. There's no guarantee that they'll get the $300 million to fund it. There's no guarantee that the U.S. Postal contract. If they understand that they're playing a story and they have to be careful in that process and kind of tiptoe around in that process, they'll be safe. Their risk will be adjusted. They'll know what they're doing, and they'll feel confident to go attack. Because this happens every single day. What happened on this one? Every single day. Every single day there's a $1 stock that goes to 5 or 7 because some sort of crazy news, and then it crashes back down for some reason. And often they come back and test those highs. And I make a lot of money just playing that pattern right in there. And the other pattern that I play that I make a lot of money on, when a company has horrible news and crashes, unless they're going bankrupt, they eventually find a bottom and bounce, and it looks just like a fish hook. And that's my bread and butter. I call it a fish hook. It's really called an oversold chart pattern. Some people call it a Jay's hook. Other people refer to it as a whipsaw. But there's always an overreaction to bad news, just like there's an overreaction to good news. Company has horrible news, and it crashes for like 3 days down. Eventually it settles and it bounces to that middle area. And I make, it's not a sexy pattern, but I make a lot of money in that little bounce in there going for 10%. I'll put $30,000 into a trade and I'll make $3,000. So I'm not crushing it with my trading. This year I'm up over $300,000. That's not like hedge fund money or anything, but for anybody watching, put it into context. Not too long ago, as a school teacher with a master's degree studying a second master's degree to be a principal, I was making about $50,000 a year. So the fact that we're not even into the third quarter of the year and I've already made $330 illustrates that I've far exceeded my goals there. And it's a side hustle for me. My big income generator is teaching other people how to trade. And the first criticism you get when you do that is, if you're such a good trader, why would you teach other people how to trade? First and foremost, I have a master's in education and taught for 10 years. The only reason I left is because of debt. So I do like teaching. But secondly, any good businessman knows that the more income streams that you can have, the better. So I have a huge income stream teaching other people how to trade, take it very seriously, and I'm good at it. So when other people have success, they tell their friends and family, and that is how I've built this huge business model, my business partner and I should say.
Yeah, which makes sense. I think anybody that really gets good at what they do and doesn't have a course or some way of teaching other people, it makes no sense. It's just a no-brainer to add that. So let's talk about some of the languaging that you're using here. Small cap stocks, large cap stocks, penny stocks. A lot of people watching might not know the difference. What's the difference between those three?
Yeah, so companies have a market capitalization. So when you say small cap, it's just a short way of saying the market capitalization is less than $2 billion. So the company is smaller than $2 billion. They can get smaller than small caps. They can go down to micro caps, which I believe is below a $100 million company, and they can go as low as nano caps, which I believe is below a $50 million company. So I kind of gravitate towards stocks under $10 that have a small capitalization. And I do this specifically for a reason. They move around a ton. Like I said, with Workhorse, I didn't participate in the initial move, and let me pull up the chart on that. I can tell you what the move was. It went from, on the day the tweet came out, it went from, let's see, what was the low? It opened at 82 cents that day. It went to $2.78. So it moved $2 per share. That's a few %. You won't see that on mid caps or large caps. The question is always why? Why wouldn't you see that on a larger company? Because people know the stories of the larger companies more. Why? Because hedge funds trade them. Big portfolio managers trade them. They attend the conference calls, and all the information is well published on MarketWatch and the Wall Street Journal and all these big name websites that cover stocks. So all the information is known, and so very rarely do you see something, an Apple, that causes it to go up 10% in a day. I mean, it's an anomaly. Only an earnings call with a beat would that happen, most likely. So you don't see these big moves in large caps. Well, what are mid caps and large caps? Well, if small caps are a market capitalization below $2 billion, mid caps are above $2 billion. And then you start to move towards your Facebooks, these companies that have a $50 billion valuation or a $100 billion valuation or even a $1 trillion valuation with Amazon. So these companies get bigger, or I believe it was Apple that cracked it first and then Amazon second. But anyways, these companies can get huge. The bigger they get, the bigger your pile of money needs to be to play them. And that's why the hedge funds trade those. They don't trade the small caps too much unless there's game-changing news. Also, retail mom and pops pile into the small caps more than the big stocks because the big stocks don't have the news that's exciting, so you don't have those types of news. You don't have those types of moves. So small caps are your smaller companies right now, names that everybody would know: GoPro, Groupon, Blue Apron. Again, let me see what's GoPro at. They've had some good news recently, so it might be above 10. 757 is what GoPro's at. Groupon, everybody knows, $3.50. Blue Apron really been struggling lately, 75 cents. So names that everybody knows, and then names that people don't know, like Workhorse. But get their names into the media, explode. There's a lot of opportunity up and down. You can short these stocks too, which means if the news is just hype and the company goes up way too much, they crash back down. You can actually bet against them and make money from the crash too. So I have no allegiance to any of these companies, and I don't care if they get the contract or not. I care about the price action. And you get those wild swings under 10 in a small market capitalization or lower, so a $2 billion company or lower, because people didn't know that Trump was going to send that tweet, and that tweet did send the stock skyrocketing higher. Once that happens, there's opportunity for traders. There's guys and gals who will even play it the same day, to be honest with you, Ty. Very dangerous. You got to be a good day trader to participate in a stock that's had a 200% move in the same day. I mean, because if it's gone up 200%, it can fall 50% from the highs same day, and you get bagged real fast, and it's happened to me. I crushed a trade up $3,000, blink my eyes and be down $10,000. That's how fast it can move on these. So if you can find out how to harness that power, for me, with small caps, it's become a very lucrative thing. I like options too. I haven't really gotten good at that yet. I wouldn't say I've studied it, but we have options experts in our service who make hundreds of thousands of dollars a year. In fact, a guy I work with, Nathan Baer, I believe he already crossed $500,000 this year in profits. A father of four, working from home. He's an entrepreneur. He's a small business that makes him like $60,000, $70,000 a year, and he's made $500,000 trading options. These people we put in front of our clients, we pop their TD Ameritrade account up so it's totally transparent. And they lose all the time. And that's the smoke and mirrors thing that people don't get in other services or a lot of services. We put forth the best traders who perform. And when they don't perform, it is shown. I've plenty of horrible losses, plenty of great wins, but it's all those base hits in the middle that really build my account over time. People come in, they're like, I can't believe it. You actually let me look at your TD Ameritrade account or your E-Trade account live all day long, not just like, hey, I placed a trade, you can see it, like all day long as the positions grow in value, as they lose value. And that transparency right there allows us to coach much more proficiently.
That's awesome. What haven't we covered the way we should? I mean, we talked about the different kinds of stock strategies. We talked about so many different things here. With a catalyst, you've explained a lot of things of what causes the events to go on, the fish hook.
Yeah.
So what haven't we covered that you think everybody that's watching and listening should know before they jump in, or maybe they're already in and not having the kind of success that they want to have, that they're looking for? What kind of advice could you give?
Yeah, so some of the biggest things that I have found to be true is that the best traders, and I've trained some of the best that you'll see anywhere in social media or online. There's, I'm sure, a lot more that just don't show their heads. But I've trained a lot of guys who have gone from cubicles. These are highly educated people. Some haven't gone to college, and they've gone on to make millions of dollars. And so I've collected the data from the people who have performed the best, your outliers. What are you doing to outperform everyone else? Like, again, this year I've made a couple $100,000, but one of our top performers last year, he made $2.2 million. This is a guy with a biology degree. He joined my mentorship service because the guy in the cubicle next to him in LA said, hey, Jason Bond. So he joins, he turns his $15,000 into $7,000, loses half of his account, quits, comes back 6 months later. He proceeds to turn that $7,000. He's coming up on $7 million in trading profits. He's the best trader we have in all of Raging Bull, right? What have I learned from him? He pays over $100,000 a year for other subscription services. And that's what a lot of people don't know. He has Bloomberg Terminal, which is like $25,000 a year. He has $75,000 worth of other subscription services where he uses data from other good traders to make his decisions. And I think a lot of people don't want to invest money in education, don't even know who to trust. Often, we all want results fast, so we lean towards the marketing that is smoke and mirrors, promises big returns, and there is no such thing. The best traders in Raging Bull that I've seen consistently outperform the market year after year after year, grow small accounts to millions of dollars, these traders are base hit traders. Nobody wants to accept that, but I've never seen anybody dominate as an active trader by going for home runs. But we are inclined to want to lose the weight quickly, so we buy the scam. We are inclined to want to hit home runs with stocks, so we go for the home runs, and that is the fastest way to work yourself out of the game. So the biggest piece of advice I can give to people, don't trade with real money to start. I've trained most of the active traders on Wall Street, or will train most of the active traders on Wall Street, and I've seen the bad side of this too. And the bad side is you lose your $50,000, and there's no way you can get that back easily. So paper trade to start, identify what type of active trading you want to do. Day trading, swing trading, which is like a 1 week hold on a stock, small caps, or maybe you move into mid caps, which are companies that move in and out of being profitable quarter after quarter. So you're $10 to $30 stocks, or large caps. And then there's options trading on large caps, which is kind of like penny stocks. Very volatile. You have to have a good strategy. You can lose your money really fast. my advice would be paper trading. Find a good coach. Doesn't have to be me. Doesn't have to be Raging Bull. I think we're a great resource for active traders. We got a ton of clients. Companies growing really fast. Could be a good place to check out. But there are a lot of other very transparent trading services out there too that people could find. But the ability for the common consumer, retail trader, to separate the smoke and mirrors, the stuff that it just looks great in the marketing, but there's nothing behind the curtain, the ability to separate that can be very hard for people. So I would always say this. Any service that tells you what their performance is and can verify it is a great place to start. If they are not telling you what their performance is, then that's dangerous. Hey, look, I had a loss last year, my first ever. I had a lot, right? So I went 6 years of dominating, and last year, mid-year, I was probably up $400,000. And then I got really aggressive on Apple calls when it crashed in December. And I lost a couple $100,000 on one trade. Most people won't tell you that stuff. They don't want you to know it. But those are the things that happen to real traders. You make mistakes. And I had my first bad year last year as a result of not agreeing with the price action on Apple. I basically said there's no way Apple should be oversold. It's Apple. And I bought it. I think it was, I can tell you what the price was. This is a really good story for people. If you're looking for a service, let me go a little bit further on the chart here so I can go back 1 year, 1 day. So around fourth quarter last year, everything was crashing, the market, and of course, Apple with it. And the iPhone wasn't as profitable as it had been in the past, and they weren't selling as many units, and it just kept crashing. I said, all right, I'm a penny stock guy, but if Apple is oversold, technically that's an RSI below 30. That hardly ever happens on the chart. So unless like the world is ending, Apple will figure out how to come out of oversold. And I want to say, yeah, I'm looking at it right now because it was such a great trade idea. Apple had gotten as low as 140. It's currently trading at 190, and it hit 220, about 220 recently. Think about that. Apple in the last 3 months went from 140 to 220. This never happens, and I knew that. So I went in with $250,000 on option calls, and I figured it would happen within a month. Apple would start to bounce within a month. Well, guess what? Market kept crashing in quarter four, and those calls evaporated, and I took a huge loss, which eventually wiped out all of my successful small cap trading. Going back to what your clients need to find, somebody who will tell you the good and the bad. If they won't tell you about the downside risks of, I'm a small cap guy, but on the side I was making that trade. It wasn't even a part of my service. But if they won't tell you, hey, I'm going in hard on Apple because I believe it's Apple, it's going to bounce. And it did, but with options, you have to pick the time frame that it'll do it in, which makes it really tricky. And if you're wrong about the time frame, they evaporate to zero. So unlike the stock, which would never go to zero, the option, if you're wrong about the time frame, can evaporate to zero if you don't take a loss. So that was a bad one for me. So I stream these things live. I talk about these things live. I teach about these things, and I try and help people with the good and the bad. You're looking for a service, first and foremost, they don't tell you what their performance is, then they probably don't have performance. A lot of people make money off of teaching strategies. They have an algorithm that they secretly have hid in their grandparents' basement for the last 20 years, but decided to bring out this year and sell it to you for just $5,000. And this algorithm has been back tested and proven, but never proven with real money. It's been proven with some sort of spreadsheet or whatever they prove it with. They're all over the place. So does the trader who's going to teach you have performance? How long have they had performance? And what are their goals moving forward? Will they show you? There's no reason not to stream your portfolio to your clients unless you have something to hide. If you're not a good trader, you wouldn't want to show your clients your portfolio in real time. If you're a good trader and teacher of your trading, then you'd be okay showing your clients. So everybody who works at Raging Bull as a teacher has to stream their real money trading portfolio. We figure if you can't do that, then you shouldn't be teaching other people. This is serious stuff, right?
Jason, where can everybody go to learn more? To get some in on some of you guys try to keep working with you guys?
Yeah, RagingBull.com is our flagship. We have about 6 or 7 coaches right now, from small cap stocks to options to large cap stocks to day trading to swing trading. Not a lot of long-term trading stuff. We really cater to the active trader, and that's somebody who's looking to buy a stock and sell in a few weeks. And it could be on something like Tesla that has recently crashed, or Workhorse that's skyrocketing higher. We do everything and everything in between.
Jason, it's been awesome having you on, man. This has been very enlightening. I learned a ton from even somebody that's a novice like me in stock trading. I don't know much about it. I learned a lot, man. So thank you so much for openly sharing with us today.
You're welcome, Ty. Thanks for having me on the show.
So everybody, wow, right? A lot of great information. I mean, for those of you that don't have any experience in stock trading, you just got a lot of great information of the how-tos, the things you need to know, even in specific strategies from somebody that I would say is probably one of the most foremost expert teachers in the space, 10,000 active students. That's hard to find somebody that's going to do that. Somebody that brought transparency to the coaching industry to show openly exactly what happens, the goods, the bads, that openly shares $250,000 losses and mistakes and talks about that and what can be learned, which I like that because I think in business, we learn the biggest lessons from the biggest mistakes, it seems like. So anyways, go to ragingbull.com. That's ragingbull.com. Jason also has another one, jasonbondpicks.com. I'll put that on the show resources. But the biggest and first step is go to ragingbull.com. There's so much great information there that you're going to get a lot of tips and tactics without even getting started. And if you are getting started and you're ready to take that leap, then they make it really, really, really feasible to get started with them, to get in, to get the knowledge you need to start getting faster results. And also to not lose your butt as you're doing this. Okay, those are the big fears because as Jason said, when you start to lose, then the problem is you just don't want anything to do with it. Well, don't come in the wrong way. Learn the right strategies right from the beginning so you could win right from the beginning and have a lot of success. So it's ragingbull.com. Make sure that you go to ragingbull.com right now to learn more and to jump in and start making some money with stock trading. So ragingbull.com. Thanks, everybody. Have a great day.